Hey folks, Dan Frio here with your market update for September 24th, 2024. So mortgage rates popped a little bit yesterday. A long stream of going down actually reverted yesterday. So is this trend going to continue on? Well, that's what we're going to talk about in today's video. So today we're going to talk about rates. We have one Fed official talking to the media today, and that's always scary, especially if they're a hawk. And we're going to find out today if that person's a hawk who is talking. And then we're going to go over our stock portfolio that we've been building and analyze that to see, how those are doing in today's market. So without further ado, let's get over to see where rates are going, and let's take a broad view of what the market is doing right now. So these are the top 6 programs people use when they're buying their first house. So if you're new to this channel, what you have to understand is these rates, they're for a specific person, I'll say. Okay, the person who qualifies for these rates, they have 5 criteria that are the same. 1, they're buying a single family home. 2, it's going to be their primary home. And 3, it's their first house. Okay, there's 2 more pieces of that puzzle. What are they? Well, it's pretty big because it comes down with the down payment and what their credit scores are. The down payment on this is 25%. So if you got 25% down, you got a 780 credit score, well, that might be what your rate is. If that's not you, well, then I'm going to give you all my information at the end of this video so you can reach out to me. So without further ado, let's get to the economic calendar. Now, this is going to drive people crazy that's been sitting on the sideline waiting for that crash. Home prices increased again, but the good news is for those out there waiting, the increase of value is starting to decrease a little bit. So here's the mainstream headlines that we have so far today is right through here. We have on Wednesday, we have Fed member Bowman speaking today. We have the Case-Shiller Home Index just came out right through here, composites. Okay, month over month, we had home prices. They were supposed to be, last reading was up 0.6. They were supposed to be up, who knows? The analyst never came in with estimates. It came in completely flat. Okay, so now is this the turn of the market? Well, last reading on appreciation for homes overall was up 6.5%. They expected that to come in at 5.9. It came in right in at target. And then consumer confidence is really plummeting right now. So we're going to keep an eye out on this section right through here. Next study is that we want to show you guys those have been sitting out on the sidelines waiting for this crash. Unfortunately, guys, you're sitting on the sidelines just watching that equity burn through. So who's winning the housing war? In the first quarter of 2024, the average U.S. home gained a remarkable $28,000 in equity with a total of $33.8 trillion in May of 2024, up from $19 trillion in 2029. So this is basically kind of when everybody started predicting, remember the housing crash? Well, unfortunately, the market almost doubled since that time. So be careful who you're listening to. The next piece of the puzzle, let's get over to the markets that we're seeing right through now. We got the economic calendar for today. It's home prices. That's about it, and consumer confidence. Let's get over to a former Fed official, and let's see what his take is on the markets right now when it comes to the Fed. So I'm going to bring it over to CNBC. I think we have, I forget who the monitor is on this, but we have a former Fed official. He's going to tell us what his thought is on what the Federal Reserve is going to go moving forward. So let's take his piece of this. Then we're going to break down the mortgage rates. We're going to look at several stocks that I've been following and watching, and then we're going to come back and give you the rest of the details. So take it away, Becky.
We want to bring in former Atlanta Fed President Dennis Lockhart. He's now a professor with Georgia Tech. And
like I said, aren't they all professors somewhere? He's at Georgia Tech. They're at Northwestern. They're at Yale. They're at Stanford. Pretty good gig. Sorry about that.
Dennis, thank you very much for joining us this morning. I think this is kind of the situation a lot of us who have been watching for a long time are a little confused about. And this comes with Chairman Powell's description last week at the news conference. He started out talking about how great this economy is, how strong the jobs market is, but then the explanation for why cutting 50 basis points at this moment. We're still trying to get our head around it. If things
I'll give you, we'll see what his take is on it, but I had a lot of people down in the description below the day I came out and said they're probably going to do 25 basis points. I'm right in this picture. Federal Chairman Powell came in and said GDP is good. The unemployment rate isn't that bad. He didn't see huge layoffs coming, but the consumer keeps spending. We know it. They're running out of money, but the picture he painted seemed pretty good. So why did they cut a half? Let's get his take on it.
Those are great. Why cut aggressively? And how much more should we expect? What's your explanation from somebody who's been in the room?
I think they've shifted from fighting inflation and being a little bit nervous about the employment situation to really protective mode. I think if we saw the status quo, both growth, employment, and inflation just persist for some period of time, they would be pretty happy with that picture. So I think it was Austin Goolsbee who used the word demarcation. This is a point of demarcation from a phase that had a different emphasis to the phase today that has the emphasis on protecting and preserving what they've got. And the 50 basis point move, I think, was maybe just a little bit of a catch-up from July. Jay Powell said in the press conference that he could have moved in July had he known the data incoming just after the meeting. And so there may be a little bit of catch.
So if you guys are new to the channel or you missed the data, there was an 800,000 jobs report that came out that said a couple different firms did a study on the unemployment rates or how many people are truly working. And two big firms did it, and both of them came up and they're like, there's over 800,000 jobs that are unaccounted for. So where are they? So that was a huge chunk out of the jobs market. That's one of the things they're referring to in this video.
Catch up and sort of a down payment for the beginning of this protective mode.
Jamie Dimon is always pretty cautious. It's his business line as a banker. But does he have a point in just thinking that maybe the markets are priced to perfection and his odds of that perfection happening are a little less than what he's seeing reflected in those markets?
Yes, I would never totally second guess Jamie Dimon because he's very astute when observing all these things. So I think what he may be reflecting is that there are sort of rose-colored glasses on markets today. They have bought into the idea that there will be a soft landing. The soft landing is underway, so a fair amount of it has already been achieved. And that can set you up for disappointment if there's a development of one thing or another that throws the economy off. So I think it is perhaps a judicious posture just to say, look, things look awfully good now, but they could actually go south from us.
Maybe that's fair. Rose-colored glasses could be thinking everything's going to be well. It could also be thinking that there's a Fed put that's back in play, and if the markets go down, the Fed will react aggressively. How do you think the Fed is looking at this?
So she mentioned a comment, I don't know if you guys saw it, she said there might be a put in place. What that means is they already increased rates, so they put it up. Now if they have to, or they cut rates, okay? So now if they have to, they have some gunpowder in their arsenal now. If they have to kind of pause or raise rates again, they have the ability to do that. That's kind of what she referenced in there. So they did a 0.5 point cut. They start seeing deterioration, they can pause, or they can come back in and increase rates. I don't see that, and he probably doesn't as well. That's why I was still on the proponent of a quarter cut, and just be consistent with it. But the commentary of playing a little catch up, that does make sense. So let's get back to the commentary. It's almost over.
What do you think is going to happen, let's say, the rest of this year and into the first half of next year?
Well, I will take the Fed speak of yesterday as a good indication, particularly Neil Kashkari's comment of basically two more 25 basis point moves. I think it's likely we're on a fairly deliberate and steady 25 basis point cut series for the next several meetings. If you look at 2025, the median in the dots is, I think, for about 7 total cuts from where we are today. That suggests not every meeting next year, but several meetings next year. And I think that's a base case. It's always a base case. They really don't know because it truly is meeting by meeting, and they will make a decision based on the incoming data. But as an outlook from today, I'd say 6 or 7 more cuts of 25 basis points. I don't completely dismiss the idea that they'll go heavy in the beginning and maybe put in another 50 basis point move. That could very much be simply the preference of the core group of the triumvirate that are at the core of the committee, if they decide that that's the way they want to unfold this rate cutting regime.
Okay, so we'll leave it at that. So that's his take on the markets, what he's telling you what's going to go forward. So what we're going to do at the closing bell today, we're going to show you kind of where the markets close and everything. I'm going to go over the new dot plot. The dot plot is basically where every member of the Federal Reserve, when they meet 4 times a year. Well, they meet every 6 weeks basically, but 4 times a year they come in and they create what's called a dot plot, where every member of the Fed puts a dot on where they expect the federal funds rate to be this year, next year, 2026 and 2027. We'll go over that in the latter today in the markets on the market close. So right now we have the MBS market up 3 ticks. This is what really creates your mortgage rate. It's not the 10-year Treasury. It's not the federal funds rate. It's basically the MBS market. So what you have to understand here is when the price of a bond goes up, we love when it goes up because the price of the bond goes up, yields come down. You can see where it's been up and away today. Let's go back 3 months, see how this progressives. So we're all the way down here at 98.45 or right around 98.15, some right around in this range here. And we went up all the way to 101.5. So a huge rally in the market that you're seeing right through there. Next piece of the puzzle is this is going to drive people nuts. House prices, yes, they've gone up. They're keeping going up. Right through here, here's what we have the analysis for today. House prices gained 0.1% month over month based on the change in June. So it's starting to cool, but I still don't see that crash, folks. So right now, home prices are up about a little over 5% on average throughout the entire country that we're seeing right there. So the next piece of the puzzle is we had Fed chairman. Remember I told you guys you have to be careful on what Fed official is talking out in the mainstream media. So right today we have Fed Governor Bowman. She's actually speaking and she dissented. She's like, we shouldn't be cutting this deep. I don't even know if she's decided if they should cut or not. So here's what you have to understand. You have to really know who's the focal point of the day in mainstream media. Okay, so what you have to understand is what Fed official, are they dovish or hawkish? Okay, let me explain this. Doves say, well, mortgage rates or interest rates are too high. We need to cut them and cut good rate cuts. Low rates are good. Hawks are always saying, nah, we should probably just stay where we are. So let's just scroll down. You could just do a survey or just Google search of this. What camp is Bowman in? So we scroll down. I highlighted her. So she is on the kind of the right side of this equation. Let's see what that means up through here so we know what she's going to be talking about. She is hawkish. Okay, so she's hawkish. So today she's going to talk about, rates need to go up, or we're going to be cognizant if inflation just ticks up a little bit, we're going to increase rates. So watch how the markets react to her comments today. Be very careful of that. It could be just a blip in the radar for that. So then let's go to, I created a portfolio, folks. So as I come out and tell you, what I might be buying in positions in stocks, bonds, other things, I'm going to track it because a lot of people don't track what they tell you. They come out and say, well, the markets are going to crash, but they don't really follow up with it. So, we had people last year and the year before saying the stock market is overvalued. I get it, but you have to participate. It's like home prices. If you want to get into some of these gains, well, you can't do it by sitting on the sidelines, okay? So what I'm trying to teach you is how to get into housing. If you don't have any money, let's teach you how to save and invest some money. So just yesterday on my vacation, I'm back now, full force. So if you need me, reach out to me. If you email me or called in or whatever, I promise you I'll be back with you today. I'm trying to get caught up. But I've been recommending some things, and I put it right out here on the screen. So we're going to track this a couple times a week to see how things are going. I might be wrong. I'm expecting probably a 10% correction here soon, but I'm a long-term investor, like housing. I'm not buying a house today to see what the value is by the end of the year. I'm buying a house for me, my family, to live comfortably, be safe, do this, and hopefully over time I pay down the mortgage. That alone is going to build me equity. And then even if home prices stay stagnant, don't move, I'm building equity by paying my payments, kind of like you're not doing with rent. Okay, so here's what we're seeing on the screen right now. I'm going to give you 4 ideas, and I'll refresh your memories on these. XLF, if you want to buy stocks in the financials, okay, a lot of rates are coming down. There's rate cuts coming. We know from the Fed. It might be a good time to buy financials. How do you get the most out of your bang for your buck? I don't recommend buying one stock. Like if you like financials, Bank of America. Wonder if you're wrong. Okay, so if you buy XLF, you're buying a whole basket of financials. Berkshire Hathaway, Bank of America, Citibank, Schwab, all these companies are in that basket. Okay, Berkshire Hathaway, it's the second one down. This is Warren Buffett. If you've heard of Warren Buffett, he's the ultimate investor. Okay, it's getting a little bit of a haircut right now. It's down some, but that's expected. Things don't go straight up. Bitcoin, well, I invest in Bitcoin, but I do the 2X, meaning every time Bitcoin moves, I get double the amplification if it's up or down. Okay, right now we bought Berkshire or Bitcoin BITC. I think it was the 9th approximately on that. We're up 21%. We're up, Brave basically a little bit there. And then Spider is the S&P 500. A better way to play this, honestly, and a cheaper way to play this is VOO, V-O-O. But I'm going to put SPY. A lot of people know what SPY is. It's the S&P 500 ETF. So basically, when you buy the SPY, you're buying all the stocks in the S&P 500. Here's what the changes are right through here. So we're going to keep a constant update of this portfolio, and we're going to change it over time. So if you got recommendations you want me to look at, put them in here. But the focus on our channel is wealth, equity, financial management, understanding the markets, and we have an emphasis on real estate because I'm a mortgage advisor. I've been doing this for 35 years. So if you'd love to use my expertise in these markets to guide you basically from application to keys in your hand, I'd love to help you. And it doesn't matter where you live. I'm actually licensed in all 50 states as well as Puerto Rico. So I'm everywhere that you could possibly be right now. If you're looking to maybe buy that first house, check out the Grand Finder. You got to check it out. People are missing free money right through here. If you're looking to refinance, call us. If you're looking to buy an investment property, call us, put in your application. You're free to check out the Grand Finder, put in your application. But we do things a little bit different. When you put in your application, we're going to give you the opportunity to set up a consultation with us. So once you put in all your information, you're going to have a ton of questions. So we're going to you'll set up an appointment with me, David, or Alan, and we're going to be there to answer every question you have. And then once we do, then we'll move forward with your application at that time. So my name is Dan Frio. Love doing these videos. Where we are right now with mortgage rates these are the top 6 programs. We'll be back later this afternoon to see if these changed or not and the whys behind it. So thanks so much for watching, guys. If you haven't subscribed yet, please do so right over there. And don't forget, we have a live event every Wednesday. That will be tomorrow, where you can ask all your home buying questions to me and Kyle Seagraves on Win the House You Love, and we're answering those right on the spot. So thanks for watching. I'll be back later today with the closing bell to see how all this ended up for the day. Thanks for watching, folks. See you then. Bye-bye.